Hi, this is Atmir with the Bulletin Board Heroes here at Box Markets. It's the weekend edition on Sunday, the 23rd of October. Starting off with the FTSE 100, we've actually got a bit of excitement to end the week. The reason for that is that we had an inside day on Thursday, i.e. within the range of Wednesday, and then we had a key reversal to the upside on Friday. That is known as a pop gun bar pattern setup, and a very bullish one normally. So let's see if we can get up to the 70, 80 or 7100 area. Obviously, given the reliability of charting in the current environment, one has to be maybe take a bit of a pinch of salt on that. But the technicals there are strong with that pop gun signal. It's quite a rare one and quite a strong one. So above the 68.70 area, looking for, say, 7100 or maybe up to 7130, which was the initial September resistance. On to the stocks of the week, or the weekend rather, and starting off with African Pioneer, which had a little bit of a push to the upside right at the end of last week on Friday. Here it looks as though we're bouncing off an uptrend line there from the end of August, three bounces off that in the last couple of weeks. Looking for a break of that May resistance line around 2.2 pence. If we get that, then it could be up to 3 pence, perhaps by the end of next month. But all the while, we want the stock to stay above 1.8 pence mid-price, and we've got that bullish divergence line there as well or at least an uptrend line in the RSI window, which should help things along. On to Audioboom, which has been one of the most difficult situations of the last 6 months or so. Difficult because it's just basically been a straight move down, which means that there have been false buy signals all the way down. The easiest thing to do in such situations is just to use the 50-day moving average as the line in the sand. And as you can see, since May, that blue 50-day line has been the resistance for the shares. That's currently around the £6.05 level, so that would be the resistance at the moment, currently around £5.30. Got an uptrend line there from September around £4.80, so above 480. There is a tentative recovery here with the 605, and then the top of that channel level up to £7.10 as maybe the best case scenario until or by the end of next month, while we hold above the 480 area. The reason that this is even a contender for a turnaround is that we've got a bullish divergence line there with the lower lows for the end of September, giving a higher RSI trace, and that is hopefully the thing which will turn this thing around after months of misery. Moving on to Barron Oil, which, as I described in my article yesterday, was obviously the stock of the week. 0.24 was my target at the top of that channel earlier last week when the shares were around 0.12, 1.13, that sort of thing. It blew the doors off, i.e. hitting an intraday high of 0.35 or so on Friday. But we have actually come back down to 0.24, so there's some crumb of comfort for people like me who were slightly conservative on the upside. The view now is still that while we're above the 0.2 area, we could retrace part or even all of that move that we had up to 0.35. The overall picture here actually is that above the main resistance of 0.13, which is basically the post-2020, post-spring 2020 resistance, we're looking for really the 0.4 area, because that's the last major resistance. So we'd have a U-shaped turnaround and get up towards the 0.4 area, which I suppose with Friday's peak near 0.35 might have given credibility to that idea. But ideally we stay above 0.2 ahead of a potential retest of the 0.3 to 0.4 zone. Moving on to a stock which is not quite in the same league yet as Barron Oil, but we've got Blencowe. We're making good progress, I think, here after breaking that line of resistance from April. Obviously, we did that before and hit the 200-day moving average at the turn of the month and then came back again. If you're cautious here, you'd be looking for an end-of-day close above the 200-day moving average at basically at 4 pence, to give us 4.7 pence by the end of next month. Otherwise, above the broken resistance line from April at 3.6 pence, 4.7 is the perceived destination for the stock. Rising 50-day line as well, so that should speed things up a bit in terms of the turnaround. And at this stage, actually, 4.4 looks like the minimum on the upside, especially as we've got an uptrend line in the RSI window as well, which should provide extra momentum. One of the more tricky situations of the year to date has been Ben's Creek, which has done a bit of an audio boom in the recent past, or almost the same time that the shares broke down in May, June, and the false dawns since have been very difficult. That's always a difficult situation to grapple with. As you can see here, we have again the 50-day moving average being the barrier to a recovery. A couple of tests of that, and then down again. That 50-day line currently around 31 pence. So we would hope that with this trend line break that we've got from last month around 25 pence, we should at least get up to the 50-day moving average near 32 pence, and maybe up to the top of that falling trend channel at 34 pence, even if the shares then fall away again. But it looks as though we've got a little bit of an intermediate rebound for the shares up towards the low 30s, only back below the 22 pence recent support, really delaying the upside scenario. I think the 23 pence more accurately, the recent support on an end of day close basis, but it looks as though we're turning around. On to Caerus, which has been trying to recover itself over the recent past. Nice sideways shuffle here after breaking the 50-day moving average. That's what you want to see in stocks like Ben's Creek and Audioboom. Break the 50-day line and then stay above it, even on dips. That 50-day line here at 3.85, and above that we're looking towards that July resistance line as high as 7 or 8 pence by the end of next month. And the more that 50-day line starts to curl up, that would help as well. On to DeepVerge, where there has been obviously a lot of pain in the recent past. Here we can see the latest manifestation of that with the gap down that we had last week. The shares now really oversold around the 12 out of 100 area. Haven't been this oversold since I suppose March time, when there was a bit of a rally from around the 12 pence area to 15, 16 pence. But what's interesting now, just in terms of looking at the chart in a close way, is that after the gap down, the low there was 2 3/4 pence. We closed around 2.56 or 2.59 rather at the end of last week. So an end of day close above 2.75, maybe the first valid signal in terms of a potential recovery here, over and above the fact that the shares are very oversold. The RSI actually went down to around near to the 10 out of 100 level, which is pretty oversold. But wait for that end of day close above 2.75 if you're a potential knife catching type of person. If we get that, then it could be back up towards the bottom of that gap down around 4.5 pence as the initial target. So above 2.75, looking for 4.5 on DeepVerge if we get that recovery of old support. Another stock which had a bit of a breakdown of late was IOG, which I chickened out of during the week. The low there on Thursday around 7.2 pence. What was interesting is that we had an end of day close back above the floor of the gap around 12.5 pence, and above 12.5 pence on an end of day close basis. We could have a go at hitting the old September support there around 17 pence, even if the shares then come back down again. So maybe that's something for people who like a bit of high octane trading. On to Wishbone, where the shares have looks like they're once again confirming that they're in a mysterious range between 8 and 18 pence. We've seen 8 pence zone come in since basically April on a couple of occasions, in fact more than a couple of occasions, breaking that line of resistance from September around 9 pence. Initial target here, the 50-day line at 10 3/4, and then hopefully back up towards the top of the range, 17, 18 pence, as we've seen over the course of the recent past. 14 pence, the previous highs before that August peak. Early and end of day close well below 8 pence, now delaying the recovery scenario. Wildcat Petroleum had a big announcement from Sudan earlier in the month, and the shares just consolidating on that particular move. Support nominally around the 1.5 pence area, and if we can hold above that early next week, maybe we'll see a fresh attempt at hitting the top of that falling trend channel from the turn of the year as high as 2.4 pence currently, and maybe that may be seen by the end of next month. Finishing off with Warpaint, which has been a sort of quiet recovery situation. If I can get the right ticker code, W7L. Rather obscure there. Here we've hit our resistance line target there from February. That was around the £1.50 level. And above the 150 zone, looking for now as high as 180, which is a December resistance line projection. Interesting that sales here have not been affected by the cost of living crisis. And also interesting that on a charting basis, we had the unfilled gap to the upside off the low, the floor of that, well, the top of that gap, the top of that gap rather at 117, never went below that, and hence we've got our strong turnaround here. 180 looks as though it could be the direction that shares travel to, or the destination rather, by the end of next month. Only back below 140 now, really delaying the upside scenario. That's it from me today. More updates over the week.